So I put out a post, in fact several posts on crude oil, and I mostly look at the WTI. But once in a while, I also consider other factors. So while I have published that the WTI could either be a fourth wave up to this low that we saw in March, or we could be looking at a fourth wave into the Feb low, one of these two. And depending on how you take it, you would end up still having the potential for a fifth wave up, pending or not. Now, what happened in the WTI's case is that it actually fell below the lower end of this rising channel that you see, which has been coming all the way from the June 2017 low. So that's the impulsive wave that I've been trying to count: 1, 2, 3, 4, and 5. And once you complete a 5 wave, you'd at least get a pullback to the $58 mark. Of course, the 20-week average support is somewhere around 64.50. So we are testing that. And in the meantime, this break is an indication that probably a larger sell-off is coming. But here's the alternate scenario, and this comes to mind because of two separate reasons. The first one is, of course, Brent, which is also an underlying important commodity, and Brent itself has actually not broken this trend line. Okay, so the one that starts from June, this bottom, it is completely not broken. And if I take even an internal trend line to the recent high here and lows, then we actually don't have a break. And so we could very well continue to draw this channel and expect that there's still a 1, 2, 3, 4 and a fifth wave pending on the upside. So Brent became one of the reasons to believe that maybe this correction is just A, B and C, 3 waves down, and we have a fifth wave still pending, something that doesn't show up so clearly on the WTI. The other chart, which I also did publish almost a week back, was that of the CRB index. And the CRB index also has a nice channel from the lows that it made in June, July, and it does have a very high weightage with energy, and therefore ends up reflecting what's actually happening in oil, although the day-to-day patterns or wave counts can vary quite a bit. And so when I look at this and I see this is wave 1 and this is wave 2, and then you started a third which could have ended here, you didn't really have a full cycle fourth wave correction here. So it just touched the 20 and moved up, but that didn't last. And now you have a proper 3-wave correction here. So the low that you've made in the CRB index would actually end up being at 202, an important fourth wave low. And now what you might get is a fifth wave. So till this channel line and these lows hold, you would actually want to try and believe that the fifth wave is still unfolding for the CRB index. You could very well draw another channel for the 1, 2, 3, 4, and so it fits very well. I just took a reverse channel of the highs and it touches exactly the lows that we've hit here. And if this holds, then we are probably looking at a fifth wave in the CRB index moving up to 216, and typically that means oil makes one more new high before you really see it going into a corrective phase. So I think we're at an important support in oil. And unless that breaks, this is where we take either a further bullish or bearish stance. If it holds, we can be looking at 75, 76, 80. I am not sure how much upside again for WTI. And at the same time, if it breaks, then only we should consider a deeper cut in oil prices.